Today we are going to look at the housing market of Chamonix Mont Blanc, a famous mountain town in the French Alps, attracting thousands of tourists every year and considered one of the most expensive resorts in France. So first, concerning sale prices, Chamonix is one of the priciest markets in its department, so Haute-Savoie. We estimate the cluster to be between 9,000 and 11,000 euros per meter square for flats and houses. The rent prices are around 32 euros per meter square, with an increase of 60% in the last 10 years, with 20% only from 2024 to 2025. If we compare Chamonix with the rest of its department, it's one of the priciest cities alongside Megève, Verrières-du-Lac and Morzine. Compared to the whole territory, Chamonix sale prices are comparable to Paris' outer arrondissements for quality stocks. If we look at housing indicators and structure, the key point is that around 69% of the dwellings are secondary residences and only 30% are main residences. That skew is extreme versus France overall, which is around 9.8% on the whole territory. Finally, for the number of new dwellings, the Commune's 2025 planning report and press coverage underline a very limited constructible land, which is mostly reserved for permanent housing, and new builds stagnated at 40 to 60 dwellings per year, compared with a plus 10% housing stock growth department-wide.
Over the past decade, the housing market in Chamonix Mont Blanc has been shaped by strong tourism dynamics and a limited local supply. The analysis of its supply and demand determinants reveals a clear structural economic imbalance. On the demand side, several key factors drive the strong upward pressure. First, income levels, especially among wealthy tourists and foreign, have increased, making housing in Chamonix more affordable for them. Second, preferences play a major role. The resort's year-round attractiveness for outdoor activities and its international reputation make it a highly desirable place to live or invest. Third, population presence. Through over 8.5 million overnight stays in 2024, expands the number of potential buyers and renters. Finally, expectations about property prices and the level of interest rates also influence housing demand. On the supply side, the main determinants restrict market responsiveness. Land availability is really limited due to the narrow valley and protected natural areas. Production costs are high, including land and construction expenses. Government regulation, especially restrictions on short-term rentals and strict building rules, further reduces new housing supply.
We can now ask ourselves what really drives prices here. Firstly, there's a highly inelastic supply. The Chamonix geography and strict planning rules severely limit construction. Data show only 270 dwellings were built between 2015 and 2021, confirming a very low new supply. When demand rises, prices jump more than construction does, explaining persistent high prices. Next, studies on mountain and constrained market suggest supply elasticity around 0.1 and 0.3, very low, while demand elasticity varies. On primary residence markets, it's around minus 0.8, so more price sensitive, and on second home buyers it's around minus 0.3. This means wealthy non-resident buyers keep prices high even when mortgage cost rises. Lastly, governments have a major influence on the prices. The new PLU, Local Urban Plan of 2025 in Chamonix, announced that the municipality is now forbidding new second home construction, then weakening supply.
Investing in housing in Chamonix can still be profitable, mainly because of its high rental prices in winter and summer. However, since May 2025, a new regulation limits short-term rentals. Each owner can rent out only one property for tourism and must get a formal authorization through the Declaloc platform. This policy reduces flexibility and potential income, so profitability now depends much more on long-term rentals. To make housing more affordable in the short run, the city can introduce a rental price ceiling which will help local residents stay in Chamonix. Yet, the downside is that such a ceiling could reduce housing supply and even lower property maintenance quality. Therefore, a long-term rental incentive policy gives tax reduction and subsidy to landlords who rent their homes to local residents, while limiting short-term tourist rentals to make housing more affordable.